If you want to know more about what's going on in the stock market right now and why it's been a little bit frightening lately, then you're going to want to watch the rest of this video. I'm your host, Stephen Rashall, along with my co-host, Neil Frankel, and this is The Smart Money Show. Welcome back, and thanks for tuning in to another episode of The Smart Money Show. Today we're talking all about the stock market and why it's been kind of haywire lately. In fact, Neil, you probably heard the news. Today was a historic day and not for good reasons. The S&P 500 and the Dow Jones Industrial Average both suffered their largest single-day point loss ever in history. Not the biggest percentage loss, but the biggest point loss in history, and that's not really good news. In fact, when we look over the last 12 months, the S&P 500 is basically flat now, so it's up a measly 0.13% from March 9th of 19 to March 9th of 2020, and that's where we're at today.
How about for the year to date for 2020?
Sure, yeah. If we look at year to date, not a pretty picture. I mean, down almost 15%, 14.9%. That's the S&P year to date as of January 1st to March 9th. So yeah, down about 15%. So, some people are asking, is the economy falling apart or what's going on here?
Well, before we get to that, let's just talk about the health fallout just for a second.
Sure.
So far there have been about 4,000 deaths from COVID-19. Most of those have been in China. Now, most of the people who died were over 60 years old and had a serious pre-existing health condition. Not 100%, but mostly. And most people who contract COVID-19 will never even know they had it. The odds of you or me dying from this are very low, even though I'm 60 and I'm 62 actually. But still, the odds of either of us dying from this disease are extremely low. Now, if you believe the numbers coming out of China, there are fewer cases of infection and death that are being reported every day out of China. If it's true, it's possible that after another month or so, the number of reported cases and fatalities around the world could start dropping as well. And that's
Right.
good news.
Yeah, it's definitely good news. And I mean, but there's plenty of things out there that could kill you, right?
Right. Unfortunately, the list is endless. But here's something that might surprise you, Stephen. Did you know that about 1 million people die every year from HIV/AIDS?
Wow. I actually had no clue the number was still that high.
Yeah, neither did I. And did you know that over 1.2 million people die on the road every year, or that 600,000 people die every year from the flu? But you know why people don't freak out about any of those three things is it's because the news doesn't cover them 24/7. If every time you open up the TV, it said, here's how many people died in car accidents this morning. Here's how many people died an hour later, they'd say, and here's how many died in the last hour. You might think twice or three times before you got back in your car, right?
Right.
So today you can't listen to the radio or watch TV for more than, like I said, about 10 minutes before getting some catastrophic news about COVID-19. And that's part of the problem. You probably don't think about these other health risks because, they're just not in your face all day long. But it's really important to put things in perspective.
Right.
You don't think about these other things because the odds, well, mostly because they're not in your face, and also because the odds are very, very low that they'll impact you. Now, the odds of dying from COVID-19 are much, much lower than the three things that we talked about, but people are a lot more afraid.
Right. And frankly, we do those things all the time, right? I'm in my car practically every day. And
Right.
anyways, let's get back to the economy. We've had people asking us, sending us emails, asking us questions. Is the economy going to implode? I don't know what you think, Neil, but look, I was out over the weekend. I'll give you an example. I was out over the weekend and I went to the grocery store down the street, not to stock up on supplies. I've already got my earthquake kit, but glad to see everyone else is stocking up now. But what did I see? Tons of people at the grocery store. It was busy. People were buying food. Maybe people were stocking up on supplies, a little bit of everything, but they were buying food and groceries They were using their credit card and swiping that, right, to buy these goods, making transactions. The parking lot was full, so people were driving there. They had to obviously fill their car up with gas or plug it in to charge their battery to get there in the first place. So none of this stuff seems to be stopping to me. And how about, right? I hear people saying, well, more people are staying at home. Well, hey, I also stayed at home this weekend for a bit. My girlfriend and I, you'll get a kick out of this. True story. Saturday night, we snuggled up on the couch. We ordered some takeout, right? We ordered some takeout and we watched Outbreak. We were streaming Outbreak. That and Contagion were trending. So maybe that's why people are so freaked out because, I mean, thanks Hollywood. That's the movies. That is not reality. But look, people are staying at home, right? They're streaming entertainment. They're ordering takeout. They're ordering goods online. These goods are all being delivered by delivery services. Those trucks and the trains and the ships and everything all take fuel and oil and gas. And, for those of us that are working at home, right, we're using email and shared file services and virtual meetings. So, look, if you ask me, businesses in America are definitely still in business, but some are taking a bigger hit than others. Pretty obvious to see anything related to travel and transportation to some degree has been hit pretty hard. So, cruise lines, airlines, hotels, rental cars, they got crushed so far this year. Not the greatest situation, and it might take them a little bit longer, right, or quite a bit longer to get out of this hole.
Right. Now, I got to agree with you. I also don't, when you look at the numbers, to me, the economy isn't falling apart. As of the end of February, the economy added 273,000 jobs. Unemployment ticked down to 3.5%. Wage growth came in at a healthy 3%. They're really good numbers, but you know what? It doesn't matter. The market and investors are scared to death. The market isn't looking at what's going on right now. It's looking at what might or what could happen. And that's why the market has tanked since the beginning of February.
Yeah, that's a fair point. What really surprised me, and I think it surprised a lot of people, was seeing interest rates here in the US drop. I mean, they dropped by 0.5%. That's a really, really big number as far as, US rates are concerned. And how about oil, right? Oil over the weekend here just dropped 25%. Now, normally, lower interest rates and lower oil prices translate to a positive thing for the economy, yet the market tanked on the news of these things. I mean, what's up with all that?
Well, very important observation. The Fed made a decision to drop rates in an effort to help business and consumers. I think it was a mistake, and apparently so does the market. So when rates go down, theoretically, prices go down because it costs business less money to borrow money and to make things and so forth. So then consumers are helped. But you know what? Into this situation, let's even say that interest rates leads to lower prices. People are not going to go on a cruise or go to a concert or whatever just because prices are lower. That's ridiculous. It was a silly move. And people looked at that as a drastic measure to signal, oh, things must be really terrible. So they overreacted. Likewise with oil prices, they cratered because Saudi Arabia and Russia disagreed on oil production. So the market misinterpreted that and saying that the price decrease, in my opinion, signals that there's a huge decrease in demand, meaning that the market saw lower oil prices as a signal that the economy is slowing. Well, it's true that the economy is slowing, but not by 25% in one day. That's ridiculous.
Right. I mean, so is all of this just irrational and emotional selling?
Well, I'm going to contradict myself just a little bit. I really don't think it's totally irrational. A lot of emotions, but it's not completely emotional or irrational. Look, COVID-19, the coronavirus, is scary. It's highly infectious, and it's estimated to be 30 times more fatal than regular flu. China has about 60 million people on lockdown. Italy is, as of this afternoon, closed for business. And around the world, travel restrictions are going to be implemented in order to stem the spread of this disease. And those restrictions will likely expand to other places in the world.
Right. I mean, I was talking to one of my clients today, and she was telling me how her and her company, they aren't going to South by Southwest anymore, and that was a bit of a bummer. And who's really ticked off actually is my dad. He's not going to see the tennis match anymore in Indian Wells. He goes every year and really enjoys that. I mean, he's still going to go to Indian Wells, but the tennis match got canceled. So for all you tennis fans out there, sorry. And this is obviously a problem for the global economy.
It absolutely is. As we talked about last week, companies are having trouble importing parts and goods from specific areas around the world. That's going to hurt their profits. And likewise, we're seeing big slowing in travel and entertainment and recreation. So it's going to slow global economic growth, and it could result in a global recession.
And I do hear some people saying, and they're really worried that a global recession or even a depression is inevitable as a result of COVID-19. What do you think about that?
Well, the market is certainly behaving as if the recession is certain, but nobody knows. It's way too early to know that. We looked earlier and we saw that the numbers actually at this point look good. They're expanding. They're not contracting. But a recession could happen, but it's not inevitable. Stephen, you've actually done a little research. So let's assume the worst case. Let's say there is a recession. Does that mean that all of our investments are going to just evaporate?
I definitely think the answer to that is no. I think we're going to be just fine. What we're looking at here is a chart of the S&P 500 since 1900, so a very, very long time. And in those gray shaded areas, we can see all the different recessionary periods. Some of those were linked to major historical events like World War II, the Korean War. We had the dot-com boom and then the bust. Obviously, more recently, the global financial crisis. None of these were good situations, but time and time again, humanity and the global economy have prevailed. We've made it out of all these situations.
Yeah, so you're right, and I remember living through many of those events. But the point is, when we're going through them, it feels like, wow, this is never going to end. It's the end of the world and it'll never get better. But what you're saying, if I'm hearing you right, is that in the past, which of course is no guarantee of the future, even during periods of global recession, long-term investors do fine. Is that, or have done fine in the past? Is that what you're saying?
I would say so. I mean, let's turn to one of our favorite long-term investors and see what he has to say. Warren Buffett, if you've ever heard of this gentleman, I think we all have. You might remember back in 2008, October 16th, 2008, I just put the article up on the screen. By the way, give this article a read. It's still very poignant and timely for today even. Warren Buffett wrote this op-ed in the New York Times called Buy American, I Am. He basically goes on to share with everybody that he believes that with his own money, he's changing a lot of his investments from bonds to stocks. And this was, as the global crisis was really gripping the economy. And he said, hey, I'm going to invest in the stock market. Now is a really good time to get in. And here, let me show you what actually happened over the next few months after he did that. Pulling that chart up right now. And here's what happened. The next 5 months after Warren Buffett posted that op-ed and said he was moving all of his money into the stock market, he got his butt kicked. I mean, he was down over 27%, or at least the stock market was down over 27%. So obviously that didn't turn out so well, but we're talking about long-term investing. And long-term investing isn't 5 months. So let's look at a 5-year period. So instead of 5 months, we're looking at 5 years now after October 16th, 2008 to October 16th, 2013. And if we look at that period of time, Warren, yeah, he lost some money up front. You can see that dip in the beginning, but he more than made it back and then goes on to almost double it, up over 81%, the S&P 500 over the next 5 years there. So look, Warren Buffett, like usual, he saw value before value was realized. And that's what long-term investors do. And that's what I think we should really heed the lesson here about having a disciplined approach to your investments. So, look, to summarize, yes, things are scary. Nothing lasts forever, and this too shall pass. This actually really reminds me of the movie I watched. So go check out Outbreak or Contagion. It's scary, but remember, that's not reality. That's Hollywood. But that's how it feels when you're in the moment and things are really, really scary and people are worried. But remember, even the most pessimistic health professionals, they're not predicting anything close to those kinds of fantastical Hollywood depictions of these types of events. The odds of this leading to a global recession, it's still relatively low, but could it happen? Sure, it could. And more importantly, there will eventually be another recession. I think that's almost a certainty. I just don't know when. Nobody knows when, like you said, Neil. No one knows. But we're going to have one. And remember, we will come out on the other side and we're going to be fine. We're going to stick through this. And then last but not least, look, long-term investors who don't get spooked and stick to a disciplined long-term investment approach, they tend to do much, much better in the market than those that get antsy and think they can time the market and try their best to get in and out. That usually doesn't end well. So look, if you have questions about your portfolio, about your investments, give us a call, send us an email. Let's set up a time to meet and discuss what's going on with your finances today. If you learned something new in this video, you thought it was interesting, be sure to share it with your friends and your family members because they probably have the same concerns and questions that you do. Hey, last but not least, until next time, I'm Stephen Rishal.
I'm Neil Frankel.
And we're helping you
make smart decisions
with your money.